Hello again, back again. Sorry, it's very frustrating when the charts disappear, when you've got different resolutions on different screens. So if they're not perfect as usual, forgive me, but that's the reason why. Let's just move the chat box out of the way and move it onto the other screen. There we go. Right, so let me just check and see what we've got. I'm pretty sure I've got more or less everything here. I've got the, that's not too bad, that's okay. That's Aussie dollar. That's what we were talking about earlier on. Let's just start with the currency futures though, if I may, because I just want to highlight something here as well. Had a lot of dollar buying this morning, and this is the, let's move that over, tidy it up a bit. There we go. These are 4 of the currency futures. We've got the Aussie dollar up here, 6A. We've got the pound, British pound, 6B over here. Got the Canadian dollar, which is the inverse of the dollar CAD, so on futures it's CAD dollar, and then we've got the euro dollar down here. And what I just wanted to highlight on the, let's just maximize that one, there we go. In terms of the volume and also the importance of levels, you saw it when Anna first started on the currency pair she was looking at, where you have this channel of congestion building, and I highlighted this last week. You have these levels building, and then you start to see the breakaway, and this is just another example of, it's a tactical approach. It may not be an approach that suits you, because if you are looking to trade out a congestion, then you have to be patient, because congestion phases can go on for some time, but when they do break down, then all you're looking for is volume confirmation. And in addition to that, it also presents a very clear idea of where to place your stop loss. And moreover, when the break does occur, and this is an example where support and resistance becomes so paramount to what you're considering. In this example, it broke away through this level. Now, this is a cluster. This is the accumulation distribution indicator on NinjaTrader. And essentially the way it works is, I was going to say it's very simple, it's actually very complex in terms of the mathematics behind it, but what it does is it presents these levels in terms of their strength by the thickness of the line. So it's a very demonstrable way of viewing support and resistance. These levels here are very thin. That means they're less important. This one's a little more important. You probably can't see it, but they're actually, the numerical values are over here as to how many times each of these levels has been tested or retested. So it tells you not only graphically but numerically the strength. And this one has been tested 4 times, as is the one below is 5. Now, when they combine together in this little cluster formation, that is a even stronger signal that you've got a very good as it was at this point, it was a platform of support. It was acting to hold the price up. You can see it how it broke through, came back to retest, retested again. Then at this point, it starts to retest again, and your interest is certainly focused on the chart, and that's what you're looking for. You're then looking for that breakaway and confirmation with volume, which is what you see here. Now, bear in mind, this is 6 o'clock in the morning, 6:30. So we can compare through here. We're up to 7 o'clock. This is when the European session gets underway, but we are comparing futures volume here. Then we get the breakaway, good volume, no real wicks. We get a volatility trigger, which is fine. So our expectation is that we're looking for congestion phase to build, which is what we see. We only get 2 candles on this occasion before the move continues. Then what we see is a very strong signal of further weakness, which is this candle here with this volume. You've got a big injection of volume. The market's trying to rally. In other words, the big operators are selling into weakness here. The market's not going up. It's weak. It may congest, but it's certainly not going up. At best, it's going sideways and probably continuation of the downwards trend. Those are the sorts of candles you're looking for in a downtrend all the time. They are effort to rally. They are giving you a signal that there's weakness. Now, they can either be on high volume or low volume. In this case, we had a lot of volume driven in, almost as much as the highest of the session, not quite. We had more of it here. But that's what you're looking for in a downtrend. In other words, it's a point at which if you didn't get in this particular candle, bear in mind we're on a 5-minute chart, so this has been a decent move on a 1, 2, 3-minute chart. But if you didn't get in on this candle and you're looking for maybe a re-entry point, well, you've got two. You've got one here. You've got a bearish engulfing candle, so you've got an up candle and a down candle. If you overlay those two, you've got one of these. It's as simple as that. So if you put these two together, you'd have a little body and a nice big wick to the upper body and decent volume under that candle as well. So if you looked at a 10-minute chart, in other words, that's what you would have. You then get another one here, which is on the 5-minute, which is very clear. And these are the sorts of signals that you're looking for the whole time. Now, at the moment, we're trading around the volume point of control. So congestion is building. We've got a lot of volume here. We've got a level of resistance that's now building overhead here. These two little levels here, which together are not so strong, individually are not so strong, but you put them together and they become a cluster of resistance. So they are capping the price action. The trend monitor here has been steadfastly red, but is now starting to transition into a potentially darker red phase. In other words, there is a pause point. The key will be whether that obviously then translates into continuation. In other words, it comes out the other side, which is what it's looking to do, and we simply see a further move lower. Now, what we've seen on that particular candle, we've got a wick to the lower body. We've got a healthy amount of volume, good volume under that particular candle. So we know for a fact there is buying in there. There has to be, because with that amount of volume, if that was all selling, then this candle would be certainly below this level here, probably a lot deeper. It isn't. So we've got some buying coming in on that particular candle. So we're looking for probably further congestion, maybe a minor rally higher, and obviously you'd be looking at this in multiple timeframes. But I just wanted to highlight it because it is a nice example of the breakaway from congestion. And you've got, let's just pop this one up. Remember, this is CAD dollar. This is not dollar CAD. This is CAD dollar, because everything in the futures world is quoted against the dollar. And again, it's another example of the beauty of breakaway trading. Here we've got very strong platforms defined. We've got level above, level below, breaking away. Now we're down to the volume point of control. Effort to rally, big wick to the upper body, decent volume under there, selling pressure coming in on the next one. You know, it's not a picture of health as far as a bullish reversal is concerned. We're not seeing strong buying coming in to take that into reversal phase. And the trend monitor is just confirming the fact we've had a little bit of indecision here, but we're coming out the other side into a period of continuation of that bearish trend. Just go back onto the spot market. There we go. And what we're seeing right now on the Aussie dollar is a pause point, which is no great surprise. We've had the strong rally lower. Now we're starting to see potential reversals coming in, which is, you know, not uncommon. In fact, if we head over onto the, if I've got the currency indices set up, let's have a quick look. Yes, I managed to get that one set up. There we go. These are essentially the currency indices themselves on a chart. We've got the yen index here. We've got the dollar index here. Bottom left, we've got the euro, and bottom right, we've got the British pound. And this is the reason that we've seen the strong move in the majors. This is 6 o'clock our time. This is what we've seen. This is dollar buying. We're still seeing that continue. We've had a congestion phase build here, but it still looks as though the dollar has got some more upside momentum to come. The yen, we've had this strong rally in the yen. If you remember, it was going up, as you can see over here, it was going up with the dollar. That is now starting to flatten off a little bit. I'm just looking over on the right-hand side. Let me drag this over, just see what's going on in terms of sentiment. This is the VIX. Just enlarge that a little bit. There we go. What have we got in terms of sentiment? Well, it's open gaps up a little bit, the VIX, but not hugely. So in other words, you know, risk sentiment is not, there's no great strength one way or the other at the moment. We're in congestion. This is the 1 minute, this is the 2 minute, this is the 5 minute, this is the 10 minute, 20 minute, and over onto the daily. We had this big move on the daily a couple of weeks ago, big rally. VIX shot up. Now we're in congestion. We're trading in the volatility candle, which is what we expect to see. But from an intraday perspective, so we've had this little gapped up open. So we've had a reaction to risk sentiment, if you will, and now we're seeing it congest into that particular candle. So it's not, there's nothing particularly strong one way or the other. In fact, if we're going to have a quick look at the indices, which I've got on the bottom here, they're all okay, good. This is the YM top left. This is the, sorry, that's on a minute. Let's change that to 5. There we go. This is the YM on 5, NQ on 5, and ES on 5. Down at the bottom, we've got the daily. Let's change that so we're all looking at the same thing. The NQ on daily and the ES on daily. There we go. And just refresh those. That's what we're seeing right now. So in terms of what's going on intraday, we've had the Chinese data. It's a little bit lackluster in terms of how the markets are reacting. There's no great movement one way or the other. I would say on balance that it's a little bit more bearish than it is bullish, but that's, you can see the sort of spikes that we get, and it's always interesting that traders per se, but forex traders in particular, have no, generally speaking, seem to consider that the US markets act in isolation, have no relationship to the forex world per se, and yet here we are. This is 8:45 UK time, and what are we seeing? We're seeing reactions in US markets. These are electronic contracts. They're traded 24/7 pretty much. There's a few periods of settlement, but essentially they trade 24/7. So they give you a straight heads up on sentiment. Cash markets don't open for hours yet, but this is giving you a direct view on sentiment and what is the perception in terms of US markets when we're trading very early doors in the UK. If you don't have them on NinjaTrader, if you don't have a platform that has them, a lot of platforms do. If you're on MT5, for example, even on NT4, you'll find them now, but certainly on terms of MT5, you will find all these asset classes. They give you that view on sentiment, because trading these markets is really only about one thing. It's about the flow of sentiment from risk on to risk off and back again. And that's reflected through the prism of the forex market, which sits at the center of everything. It is the gateway for cash, basically. That is what you see reflected every single second in terms of risk currencies, Swiss franc, yen, dollar, commodity currencies are risk currencies. That's what we're looking at the whole time. The whole thing is really just about one thing. It's about risk on, risk off, and the constant oscillation from one to the other. And as you can see, we've got the VPOC, the volume point of control, is in evidence on pretty much every single chart. Let's just pop this one up, the 1 minute. Nice little example of VPA in action here. What have we got with this candle? And bear in mind, obviously, we're channeling here. This is a very tight range. We're trading from 45 to 60. So we're in a 15 pip range here. But nevertheless, VPA works in all time frames. You've got a nice example here. We see lots of volume coming in. We get a nice deep wick to the lower body. What is that suggesting? It's buying. It has to be, because if it was selling, that close will be down here. It isn't. It's up here. So we've got some buying coming in. Then we get another hammer here. We get a little bit more buying. Then we get an injection of volume. So the buying is then converted into a move higher. Now we're trading back around the volume point of control. We've got some resistance in overhead. And going back to where we started with, as Anna said, we look at volume in two different ways. We look at it in this linear way, if you will, from individual candles and their associated volume. We then look at groups of candles. Obviously, we're looking at different time frames. And then we're looking at, is a trend higher? Is it moving up on rising volume, or is it moving up on falling volume? We look at anomalies in that respect. And then what we do is we move to the volume point of control, and we look at the histogram here, the shape of the volume. And we bring in support and resistance. So we're hitting resistance here, but when we move through that, if the price action moves through that, the trend monitor has transitioned to blue. You can see it here. But if the price action moves through that region, then what we're interested in is this volume, because if this volume is falling away, which it is, then for this pair to move through there will require less effort down here, because there is less in the way of resistance up here to cause it to pause. So we're always looking at areas of volume concentration. We're looking at high volume areas. We're looking for low volume nodes, because as traders, When we get to those low volume regions, we expect the market to move through them pretty rapidly. It's all about its expectation and anticipation of what is going to happen next. And part of that is reflected through obviously the volume relationship here. You can see it building in real time and how that candle then closes off. We're on a 1 minute, so it's closed off. There we go. So we've got some weakness. You know, we had, if the candle closed up here somewhere on that sort of volume, then you could say, yeah, price and volume are in agreement. And, you know, this market is remaining bullish. We've got some selling coming in under this candle because we've got a wick to the upper body. We've managed to break through this level here, which is fine. That's now starting to act as a platform of support. It's pretty tight. Bear in mind, these levels are pinpoint accurate. We're not talking about wide sways of price action here. We're talking about individual pinpoint pip levels practically. That's how accurate it is. But if we move away from here, then if the price action is going to accelerate and move higher, it will require less effort to get through here. And therefore, our expectation is the price action will move through there pretty swiftly because volume is not acting as a resistance to that move forward. And it's exactly the same principles as with price-based resistance. We just look at it from the perspective of volume. It's as simple as that. Just see if this develops a little bit further. Sorry, way over time, I think. Oh no, we're not too bad. Let's see how that builds. And of course, when you move down to the slower time frames, what you're looking for there is you're then looking for other signals which will help to confirm what it is you're trying to do. Now, if you're obviously looking at this chart, bear in mind that on a slower time frame chart, however that may be, whether it's a 5 minute to your 1 minute or whether it's an hourly to your half hour or whatever it is, anything that appears on that chart will carry more weight because it has time aspect tied to it. So in terms of these levels here, which are building and constantly refreshing as price action tests and retests, from a technical point of view, these levels here will carry more strength than on the 1 minute because they've got a greater period of time involved in their build. So when you're looking at this as a potential opportunity, if you were looking to trade to the upside and take a reversal off this congestion phase, these levels here are very important. So in terms of your 1 minute chart, you might have a level there, but in terms of your 5 minute, these are going to be far more significant as you've got a cluster of two, and also they carry more weight because they're on a slow time frame chart. So if you're going to take a long position, you'd be advised to wait beyond this level here and possibly up to this level here. Now, the next question you've then got to ask yourself is, okay, well, if I take that trade, how much headroom have I got? Where is this market like to struggle? And it's pretty obvious, first of all, that the volume is falling away, which is good. But then you look up to this level and you've got a whole raft of stuff up here in terms of price-based resistance, which is going to come into play. So in terms of the likely potential return of that trade, when you're looking at it in that perspective, in that way, which is it's how we teach, it's what we do. This is not about the nonsense of risk and reward. I've got to have 2 to 1, 3 to 1, all that sort of mumbo jumbo. This is about looking at a chart and making a decision based on information that is there and from the market, not what you want, but what the market tells you in terms of a technical picture on the chart. So if you were looking at this, thinking of jumping in here, to be perfectly honest, I wouldn't bother because you've got this level, all these levels here, which are going to come into play, and almost certainly the market will pause there. And even if you get through there, you're then running into these levels up here where you've got a lot of congestion. So there's not a great deal of free water, headroom, if you like, to take that trade in terms of the potential risk versus what it's likely to deliver before it runs into some resistance overhead. Didn't pick that one particularly for that reason, but it just jumps off the, I was going to say it jumps off the page, it jumps off the chart, if you will. And that's what you're doing the whole time. You'll then down onto the 10 minute. Now in terms of 10 minute, slightly different picture. We've got a nice low volume node here. We've got a very, very strong region here of resistance, which is being tested repeatedly. If it gets through there, we've got a low volume node. You've got to consider what's going on the 5 minute chart. And in addition to that, on the 10 minute chart here, we've got this great wedge of volume, which is sitting here also. So in terms of a move through there, that's going to take a huge amount of effort. You might find it hops through there, slips through this region, and then runs into this great wedge of resistance over here. So it's just constantly analyzing the chart, doing it in different time frames, and just picking your trades according to whatever it is, whether you're reversal trading, whether you're trend trading, whether you're going to trade breakouts, what it is. And remember that you can take one tactic to market. If you're comfortable trading congestion phases as a breakout trader, you can say, right, that's all I'm going to do. I'm going to take one tactic and I'm going to apply it to all the markets, all the currency pairs. Or you might decide that you only want to apply that tactic to one currency pair or a group of currency pairs. Alternatively, you may be a trader like us. We trade everything and anything, all different markets, all different tactics. You know, we're not specific. We're not a sharpshooter, if you will, a sniper, just taking one tactic to market. There are so many different ways to trade, and you have to find out what suits you. And really, that's why within the Forex program, we urge all our students to start with the psychology of trading, because that's where it begins. It's about you and finding out what suits you.
Could you just quickly pop off onto the cable?
Yeah.
Because there's been a nice reversal on that one as well.
Okay.
Just talk through that one and that's it.
Okay, let me just flick these over onto cable. There we go. Just loading up.
I just had the 5-minute chart up.
There we are.
With the
okay.
2260, so it was a demand area.
There we are. Anna's just highlighted the fact there's a nice move, nice reversal on cable. And in fact, I'll just hop onto the CSIs very quickly. We'll just see that taking shape, no doubt. There we go. Let's pop that over. There we are. That's what we're seeing. Very strong on 5-minute. There we are. Very strong on 10, and it's reversing on 15. That is also being reflected in terms of a roll in the dollar. Dollar starting to sell off strongly, selling off strongly over here on the faster time frame along with the yen. And that's why we're seeing what we're seeing at the moment in terms of cable, which is a great, again, you know, it's a reversal trade. It's happened relatively quickly. There we go.
After a false track,
a little, and of course you've always got to factor in, you know, the London Open. But when you scan across the charts, what are we looking at? This is down onto 10. Let's just pop that up full size. There we go. What have we got here? Lots of buying coming in there. Remember, this is 8 o'clock London time, so we can compare volume through here. This is European time, so we've got, you know, we can compare volume in there. We can't compare hopping over the session. Now we can start to compare like with like from 8 o'clock onwards, because we're in the same session. That's where the buying coming in, big deep candle, ton of wick coming in, a ton of volume coming in, and off we go to the upside. Same on 5, just pop that up, there we go. What have we got? Lots of volume coming in. We had volume coming in here at 8:15, so we had an initial surge of buying there, more strong buying here. Now we're starting to see that develop. Now in terms of you know, where this is heading, we've got a low volume node up here, so you know, that's provided we battle our way through here, which should require less volume. 2 nice candles here, breaking away from the volume point of control. You know, there's no reason to think that if we get up to this level, it's going to hop through there pretty quickly before we start to get up into the 123 area, where volume starts to build again, and progress will no doubt be slowed somewhat. And of course, going back to what Anna said right at the start, is that with Brexit now, you know, firmly back in the calendar, you can expect volatility, you can expect sudden things occurring out of nowhere because someone has said something. You know, we're back to where we were for the last 2, 3, 4 years of Brexit dominating, and just be aware that you know, you can be blindsided literally in the space of a nanosecond because someone says something. So just be aware, if you're trading pound, you're trading any of the pound pairs, Brexit's back on the horizon. Just to wrap up very quickly, oops, before we go, let's pop that out of the way. Not sure what we've got here. There we go. I've got them all up here. This is what I mentioned earlier. This is the complete Forex trading program. It's literally what it says. What it says is what it does. It tells you, it gives you all the information you need from the technical, the fundamental, the relational aspects. These are the core modules, the mechanics of trading, and as I mentioned at the start, the psychology of trading. Because if you understand yourself, there are 8 PDFs associated with this. You also take a self-assessment program to understand, which you can analyze yourself. We teach you how to do it. And from there, it will give you a view on your strengths, your weaknesses, what is likely to suit you better as a trader. Because if you're aligned to what you enjoy doing, you will achieve the chance. You give yourself so much better chance of success, because if you enjoy what you're doing, then the chances are you will succeed at it. If you're struggling, if you're trying to be a scalping trader and you're not suited to scalping trading, then you're going to struggle per se. So you have to find what suits you. You have to settle into that approach that suits you, that tactical approach, the time you have available, all those sorts of things. Then you have all these other modules. You've got VPA chart examples, how to use the indicators. Of course, we show you how to use them. Pulling it all together, topic webinars, webinar library, and there's over 200 hours of video in here. It literally covers all you need to know to succeed in this business, which is tough. It is a complicated market. It is complex. But if you have the knowledge and understanding, it is possible to succeed and make money consistently. And we have a lot of the traders in the student group who are doing just that. And it's also backed by our VPA chat room, which is hosted by Anna and myself. We're there every day. If you're interested in the indicators, you'll find them all here at quantumtrading.com, MT45, NinjaTrader 708, and TradingView. TradeStation is coming, should be around in the next 4 to 5 weeks or so. So we will have that up and running. We've got TradeStation Global, which runs on the Interactive Brokers account. So if you have an IB account, you can hook it straight through into TradeStation. It's a fantastic combination, very powerful, deep discount brokerage with all the advantages of trading through TradeStation and wonderful charting. And we're also bringing out the TradeStation Securities, TradeStation 10, and both of them run Radar Screen, which is awesome. So we're very excited about that. Can't wait. I'm just looking over at the VIX. The VIX is dropping a little bit as I'm speaking. So equities are maybe going to tick up. Risk on is going to return a little bit. You can find all Anna's analysis over here on annacooling.com. And check out all the books which are up on Amazon, both in terms of Kindle and in terms of paperback. So that's it. We're done. Apologies for the technical issues, the charting issues, and all the rest of it. Thank you so much for coming along today and bearing with us through all of that. We do appreciate you taking the time to spend with us. Hope you've enjoyed it. Hope you found it useful. Enjoy the rest of the trading day, and we will be back on Thursday afternoon, 5:15 UK time for the US futures session. So that's us done. See you soon, and bye for now.